Essentially, the comparative data law that passed in 2002 was supposed to help the public, but in reality, it only strengthened the banks. The law effectively reinforced the strong over the newcomers, which is exactly what we just talked about.
By the way, they also warned that this is what is going to happen. During the discussions about the law, they warned that this is exactly what is going to happen, but the law was more effective. When can the law help you? In a situation where there is significant competition, with many banks and players providing credit, the power of the individual consumer to use their credit data is much more significant. In such a non-competitive market, it doesn't matter what you do, the bank has much more power over you. Therefore, there is no other option but to try and improve your credit as much as possible, because you are initially in distress.
Great. So you actually think that this law really strengthened the banks?
Nothing to discuss.
Essentially, the regulator was supposed to do this in order to weaken them and to create some form of competition.
Who is the regulator? The bank supervisor. But we know that the bank supervisor is constantly working to strengthen the banks. He does this through, it is also the Bank of Israel, the bank supervisor at the Bank of Israel, of course. So, how does he do this? He does it in several ways. The first way is by constantly pushing for mergers between banks and reducing competition. As a result, the banks become stronger, of course, at our expense. This was a sub-example earlier. The second way is that he does this through rulings in the courts. He constantly appears in court when there are claims against banks in order to protect the banks from consumers. Although it is a delusion that in his role as bank supervisor, he is also the head of the Public Complaints Department against the banks. Imagine, if the state auditor was also the state, how can you be both responsible and an auditor? It's absurd, just like a double agent. And the third thing is the way he promotes the laws. The comparative data law is one law, but also the interest law. I forgot the specific name of the law, but it is the law that prohibits excessive interest rates. They passed a law that prohibits excessive interest rates and exempted the banks from it. After all, the biggest thieves are the banks. Only in banks can you get credit at prime plus 10. It's only in banks.
There is indeed something in this interest law, meaning there is a limit on the interest that can be charged.
But it does not apply to the banks. The bank supervisor arranged an exemption for them. They are exempt from the law.
And all other credit obligations outside of banking are obligated hereby